All right, hey there. Good morning, everybody. It is just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 10th of January, 2023. I'm Chris Franks with Texas West Capital, coming at you live from just north of Houston, Texas. Hopefully, y'all are doing all right out there. I see Mark's here already. Yeah, man, new thumbnails, right? So we'll see if it drives more interest. Made the same silly faces everybody else does, so we'll find out, right? Oh, man. Data, what's up, man? Fibaswani checking in. Hey there, buddy. Man, I noticed they still ain't got your account taken care of, have they? On Twitter, man. God, again, guys, if you follow Fibaswani, be careful out there. Somebody hacked his account, and they got all that nonsense about a free giveaway and all this other BS. They're going to steal your money, man. It ain't him. But Twitter support is... not very quick, we'll say. Diego, good to see you, man. So yeah, if you guys are joining in with us, you can get in. You can get in. First time ever. Tier 3, $20, $19.99 for 1 month, guys. That's everything included in Tier 3. That's over 300 hours of educational video content. 3 live educational streams a week. Wyckoff on Mondays, price action concepts on Wednesday, and then Elliott Wave on Thursday. And not only do we teach you these things, we show you how they work, and we kind of show you how they work together. So going well above and beyond anybody else you're going to find out there, guys. Most people kind of get one thing and they stick with it and they go, listen, if you're going to come with me, this is what you're going to learn, whether you like it or not. We're here to just give you an understanding, a real understanding of how markets work and how all these systems and everything kind of come together and do their thing. So, man, take advantage of it while you have a chance. It's part of my mission this year, which is to help 10,000 traders become consistently profitable. So that's our first step as we get into this year. You can do it here at, well, geez, I've got the link over here, don't I? Let me see. Let me get it for you. Oh, man, almost messed that up. Let's see here. Here we go. Let me find out where I put this box here. There it is, guys. By the way, you can also subscribe to my free newsletter at the Market Breakdown. Can't even do this. Breakdown.substack.com. Free, goes out every week. Like I said, I think we're probably going to become twice a week. And the other issue we're going to have with that during twice a week is maybe more of a compilation of different things. So, yeah. But anyway, hey, while you guys are here, go ahead and like, the video here, the stream, and subscribe to the channel, whether you're watching it at Twitch or YouTube, or I guess if you're just watching it on Twitter there, man, go ahead and follow me on there, all right? Name Mr. Wilkes, Kimasabi, Bamboo, what's going on, guys? Fibaswani says those Twitter support peeps have not even contacted him. Oh, my gosh. It's been like a week, guys. This is so bad. Man. See here, Mark says Papa Elon has them bringing their own toilet paper. She might be waiting a while. Oh, man. What's up, Andrew? Good to see you as well. So you guys know we got the, we got that LMT program going. By the way, if you guys are really kind of interested in just stepping up and making life better for yourself, right, as far as trading goes, and I mean, you're serious about it. I mean, if you're not serious about it, there's no reason to spend any money anywhere, guys, okay? I mean, there's just not. If you're not serious about it, you're not willing to put in the time and the effort, there's nothing anybody can do to help you become a better trader, right? But if you're serious about it, you can check us out here. You can join us right here. The LT Mentor Program, it's a year long. For right now, we're kind of keeping it open. Whatever it's like an evergreen program. We'll keep it going, and you can kind of join. It's not like a specific set and start date, but it is a year long. That gets you the system that I use, the day trading system I use. We just taught that a few days back. People already making money with that, which is fantastic. I'll have some testimonials if people are kind enough to put them up there for you guys as soon as possible. But not only that, but we're going to delve into the psychology of trading, the psychology of what you're dealing with and how to deal with it better. That's probably one of the things I do better than most people out there, is kind of that, it's just 25 plus years being in this, guys, doing this. And then, I've got that master's degree in psychology. So, I mean, there's a lot of help in there, help you become better traders. NJ Wave Rider, what's up, man? Good to see you. We would love to have you there anyway, guys. Absolutely fantastic, bustling little group of people joining us with that. So where are we at? Let's see here. Let me find the right chart I'm looking for here. We can go ahead and jump in right here. Nevolution, what's going on, man? Good to see you. Bamboo says LMT is the best that I saw since ever. It's like the pro cost. I appreciate you, man. Good to have your review on there. I definitely appreciate that. Put a lot of effort into that. We also do Trade With Me sessions on that on Mondays and Wednesday morning from 8 to 9 a.m. Central Standard Time. And we look at some potential setups using my system there in stocks, futures, crypto, Forex. Whatever happened to you, we kind of just scan through it and go through it and tell you what we're looking at, where the entry would be, where the target would be, where the stop loss would go, all that fun stuff. So here we are, guys. You guys excited here? Are you guys ready? I mean, we've had Bitcoin continuing to push up, and I think people are getting pissed off. to be honest, right? Mark, man, yeah. Remind me a little bit on Gala. Remind me on that. And so what did I tell? So I told Discord before this happened, I said, if we get the breakout above that descending resistance and that daily pivot there, that kind of impulsive breakout, I said it's likely, if we don't just like impulsively pop up higher, it's likely we could see price just continue to kind of just grind higher and higher. And, it's especially noticeable on Bitcoin. This has happened in previous cycles where once it makes that bottom and then it just kind of just sits there and grinds up. And so what happens is people are very bearish and they expect it to go lower, right? And so it doesn't. It goes higher. And so they continue to look for rejection. And it doesn't get the rejection. It continues to move up, right? It continues to grind. Well, the problem with the grind is it keeps people in limbo. They become really nervous. I don't know if I should get in. What if it's just coming to an end? It's overlapping price action. It's probably just coming to an end. If I get in, I'm going to get stuck buying the top like I did at the all-time high, right? So they don't buy, and it continues to grind higher, right? And so this often is where traders get caught, right? So one of the things, again, one of the things that we do here in Tier 3 is we've got, I don't know, probably like 40 different systems that I've taught over the last year plus that you've got access to as well, those previous recordings. But there are so many different ways in all those systems to get into a trend that's already going without being worried about, oh my gosh, what if it goes against me? Being able to lock in some profit or lose very little if it does go against you. Because what else do? You sit here and you keep waiting for it to do the pullback, and it keeps grinding higher and higher and higher. And then when it finally does a pullback, you think, oh, there we go. Now it's rejected. Now we're going to go lower. And it comes lower for a little bit, the pullback, and then it goes higher again. You're like, well, what the hell am I going to do? If I am not, if I'm not describing what you guys go through, if you've been through a bear market at least once, tell me I'm not describing what you go through. I mean, this is what I went through at first too. You guys have to remember, I didn't just like all of a sudden one day, know how to trade. I made all the same mistakes you guys made, all of them. And, I've worked since then to learn how to do it better. I became a student of the market, right? My goal was to learn everything I possibly could about markets and trading and whatnot. And the one thing I found after doing all that is practically all these systems and styles, everything of trading, they take you to the same place. It's just, you just need to find the one that resonates with you and then stick with it. Practice it consistently. And not just practice it consistently, but practice it correctly consistently, right? You don't want to practice it poorly, right? But these are all the things that traders usually don't do. They don't have time. They can't be bothered to take their time and do it, right? And practice. Who wants to practice? Risk management? Risk management's boring. Who wants to do risk management, right? So, let me see here. Fiboswani says, let's hit 17.5 while you're listening. Yeah, I hope so, right? That's what we kind of got there. Fiboswani's being facetious there. I've made no mistakes in my 20-year career, he says. Yeah, right. Anyway, so what are we looking at locally here? Well, for right now, when we zoom in, this looks like it may be a flat correction kind of going on here. ABC, maybe ABC. And if so, we're expecting to pull back down toward this same level and then a rally up to the R2, pull right on back to this congestion here, and then rally up toward this 17,752 and 75 cent kind of opposite. Opposite. I read Fibaswani's comment there. Quite the opposite, he said. But to target up there, right? But here's the thing. Even if it's not, even if that bottom is likely in there, we're at least heading to this target. So my targets right now on this rally, overall, 17,752.75, followed by the daily R1 pivot there right around 17,855 or so, and then the EQ of that supply structure around 18,092. So that's kind of ultimately where I'm looking as we ride this up. The big picture, guys, well, we just got that bullish cross here on the 4-hour Stochh RSI here, right? We did get a lot of volume as we got toward the top here, similar to the volume we got up here toward the top. So again, looking for that potential rejection and pull down in 5 waves toward that swing low area right here, right? But here's the thing, guys. Here's it. Look at this. Look at this daily. So we still have this wave, parentheses 3 target up here, minimum expected up there around 20,963, right? Your model looks very similar on the 4-hour Fibbo. Yeah, man. Yeah. I think we tend to get pretty much the same looking targets, more or less, even though we look at it a little bit differently. Yeah, I love it. So, I mean, this is the big picture, guys. I mean, reality is we got to get above this swing higher. If we get above that, though, we've got a lot of inefficiency, or what older traders like myself tend to call gaps right here. And we usually just get sucked right through that gap toward the congestion, right? And so that would get us there, but, we need to do it. What I like about the daily here is so we had this move up through, and then we had all this volume coming in, this rejection. But here we go trying to break out higher. And that's what I like to see. Because most of the time, this type of candle is a rejection, right? It's the end of the trend. So if we can break out higher than it is on that, then it becomes much more bullish, right? It's the same thing we're talking about this candle here. Because on the weekly, remember we talked about this? I said, man, that's not a good candle. It's quite a bearish candle. I said, but if we only get and usually this would signal a breakdown below the swing low here. But if we get a breakout above it, then it becomes quite a bullish setup. Because it lets us know that the market said there is no way in hell, man. We're not ready. We're going up, man. And contrary to what people believe or what people may have told you, the people, Wall Street, Bitcoin Wells or whatever, they don't actually control the market, right? The best they can do is kind of push it around locally. But at the end of the day, if the market's bullish, if the market itself is bullish, or at least not bearish, there's not a whole lot they can do about it. But especially if the market's more bullish at that point, I mean, you can have one guy trying to dump a whole bunch on the market, and history is wrought with all this coming, people trying to do this. And it just, best case scenario, gets a little bit of a pullback, and then it eats up all through that and goes up higher. And so they effectively are out, right? Because what they're trying to do, if they try to do this, they're trying to push that price down lower so they can sell, lock in some profit, gain at a lower price, right? But it rarely ever happens that way. The only way it happens that way is if the market is very bearish as it is. But here's the thing, guys. What people don't tend to tell you online as they're going through this, because most people don't get it, right? Most people don't understand. They say bottoms, they say tops, they say accumulation, they say distribution, and they have little to no clue what they're really talking about. What does accumulation mean? Accumulation means that the market is running out of supply, that there are bigger players who have decided that they want to accumulate, they want to get as much as possible in these areas. Now, that doesn't mean price can't go lower, but it means they're going to be testing the highs and lows of those levels as it does it, right? So they're testing, they get the low here, testing the high, it gets sent back down, testing the low, testing low. But looking at this here, it continues being, high, low, lower high, lower low, lower high. And so what do? They're like, well, there's too much supply still on the market, so let's send it down and see what happens. Let's see if we can scare the rest of the supply out of everybody. So you get this big, large volume on the breakdown below the swing low of that range, right? Like a terminal shakeout type thing. And then what happens? You get a slightly little bit dip here, lower, and then rallies up, gets rejected, comes back. But now we're finding support right here. So this is why it becomes important. If we break out above here, it says that the market, basically those who are going to sell have for the most part sold. Those who they may want to sell more, but they don't have anything left, because remember, the supply has moved from their hands into those stronger hands, right? Those longer term holder hands. So that's what we're on the weekly. That's what we're watching. We're looking for a breakout above this 18,385 and 36 cents here on Coinbase. If we can get that, I think there's little to keep us from rallying up to the weekly pivot. If we break out impulsively above that weekly pivot, guys, that should be all she wrote. We should be then headed toward a new all-time high, right? So that's what we're looking at. There's kind of the steps on that larger time frame, right? Fiboswani says on the daily, he's looking for 3 consecutive daily settlements above 17,450, and then 20,000 becomes his next target, which I think he says matches your R1. Let's see here. It sounds about right. Well, no, it's 20,000 is actually closer up here. It's closer up. Yeah, that'll run the pivots, right? And so my expectation is if we rally to the R1, my expectation is kind of this rally up toward the R1, pull back toward the pivot, and then rally through, at least R4, if not R5. If we can get this push up into this R1, this supply right here, around that 18,000 area, and we get a successful retest of the pivot area as support, and then a breakout back above that, we should rally up at least to the R4, if not the R5. So yeah, and that would take me right to your kind of target area. Yeah, same one. Rossmark, what's up, man? He says, how do they actually send it to one direction or the other? Is it via actual market buys and sells, meaning they would then need to reaccumulate? Yeah, so exactly. Ranges. So when you have your bigger players in ranges, they both buy at the bottom and sell at the top. In an accumulation range, by the time they're done with the range and it breaks out, they are net accumulators. So if they spent, I don't know, just a quick round number, say $1 million, right? During the range to keep it down, right? If they sold $1 million in there, they would have bought well over $1 million. So they would be net positive on the breakout of the range, right? In distribution, it's the opposite. In distribution, they're selling more than they're buying. They're buying enough at the bottom to kind of keep it going, right? So like right here, they're buying here to continue, but they're selling more at the top because they're trying to get rid of it, right? And get it lower than buying lower. So they become net sellers in distribution ranges. So yeah. Oh, are you talking about, or do they hold a range via limit orders? Yeah, more or less. Yeah, a lot of times if you do order flow trading, a lot of times you'll see them called iceberg orders. It's usually the way they do them. Iceberg orders basically are just that on the book, you only see so much supply, right? Or so much demand. And what happens is, as retail buys or sells into that, right, it replenishes. And so it's called an iceberg order because it may only show, say, 100 Bitcoin or something right there, right? But underneath the surface, they've got thousands and thousands of Bitcoin waiting to replenish either the buys or the sells, whichever way they're going with that iceberg order. So yeah, usually that's the way it is. They run it through those limit orders, but then they run them usually as iceberg orders so that you don't know how much is really there. They don't have it on the books at all the time. Because if they did, you go, oh, well, they're obviously going to buy here, so I'm not going to sell, right? And that defeats the purpose of what they're trying to accomplish here. Because you have to get off the weak hands out of the market, right? You have to get out your shorter-term sellers. Weak hands doesn't mean people that don't know what they're doing necessarily. It includes those. But it also includes shorter-term traders, like I tend to be at times. It's the idea that they're going to get supply or my dollars, depending if it's the top or bottom there, right, out of my hand, so that I can't keep playing that range and impede movement, right? The idea, excuse me, sorry about that hiccup there. The idea is, especially in accumulation, is to get enough supply out of those short-term hands so that they can't stop it as price starts moving up. Yeah. But then you usually don't get the big breakout, the big move that everybody looks for until you break out of the range. So again, it's that grinding or whatever that kind of kills people, right? They're like not sure about getting in, because they're worried about the weekly time frame when they're trying to trade the 4 hour. Doesn't make any sense, right? Way too big a time frame to worry. 4 hour can do a lot in the opposite direction during that weekly overall trend, right? Yeah. Market makers are different. Remember, guys, so there's still a lot of confusion, I think, with newer traders, or just with traders in general that aren't professionals, about what market makers do. Market makers, guys, are basically just hired by exchanges and brokers and whatnot to provide liquidity. They make their money providing liquidity. They're not trying to buy all your stuff and hold for later. They have to get out of the trade. The longer they hold their position, the more likely they are to lose money. Their goal is to get in and get out as quick as possible. They have to hold it at times for a little bit, because they're they're based on algorithms, right? Which are based on indexes of certain exchanges, right? Like for Bitcoin to be like Coinbase and Bitstamp and a few others, and they're weighted indexes, and that's how you have the price staying the same across, or pretty close to the same across, multiple exchanges or brokers or whatnot. But their goal is not to take your money from you or to sell into you or whatever. I mean, their goal is just to maintain as close as possible the price to the index price. So if your particular exchange is getting a little frothy and everybody's buying, but overall the index is kind of starting to top out and move down a bit, they're going to sell more into that to keep that going, right? But the longer they hold on to those positions, the more likely they are to lose money. They get paid by the exchange or the broker to provide the liquidity. That's where they make their money. It's not about trying to sell into or buy from you to make money, holding or anything like that. Yeah, and the manipulation isn't really manipulation like you think, though. Again, when we talk about, there's only so much you can do. The market is the market. I've talked before about, it was probably about, I don't know, maybe about or mid 2000s, like, or 2015, 14, somewhere around there. Somebody tried to dump a whole bunch on the Bitcoin market to, I gotta find that story again, to try and make price go down. And what happened was the market just sucked all that up. It dipped a little bit locally. It just sucked up all that and went up higher and left them without anything happening. Yeah, so it's not really like say I go out there with 10 billion, $1 billion or something, right? And I make the market do something it doesn't want to do. The market's going to move the way it's going to move. The best I could do is maybe affect a short-term pullback or something in the opposite direction. But if the market is not interested in doing what I want it to do, it's not going to do it. That's just the way it is. Yeah. Sure, I get it. I mean, other than myself, feels good to have some entity to blame. I like that. Am I any good on a point and figure chart? Any objections based on the range of the last 6 months on it? I haven't looked recently. I'll have to look again when I get a chance. Yeah, I haven't looked at a point and figure chart in a bit for Bitcoin. Excelsior, what's up, man? Good to see you. Bamboo likes those pivots, right? Yeah, so I mean, this is, what we're doing here. And so, I'm still holding to the idea that we have, that the bottoming process kind of started back here in the June swing, right? The June swing low. This being more of a terminal shakeout to get out the last of the holders there. Terminal shakeouts tend to end in ranges before they break back up into the previous range. And so, that's kind of what we're seeing here. So again, looking for that breakout above this 18,000, what is this? 18,385 and 36 swing high here to head up into that other range. Again, a big thing is we did break down through that descending resistance, right? So we do have that happening. If we do break down lower, again, we're still looking at that 13.8 to 14.1 kind of area, right? If we do break down below the swing low here. But until then, I mean, things are continuing. Now, they're not necessarily overtly bullish at the moment, but we did get a breakout above the pivot, and we did get a breakout above that descending resistance. So if we can grind again, the key would be to just rally up into this R1 area here, pivot area on the daily, pull back toward the pivot, and then break up higher out here and try to run this R4, R5. If we can get that, odds increase significantly that the bottom, is formed here. The lowest is potentially in. So that's what I'm watching, right? So yeah, that's what we that's what we got going on here. So yeah, that's kind of where we're at. Again, we've been riding this rally up off this this bullish divergence here on the daily. I mean, that was a pretty clean. There was no reason you shouldn't be long there. If you wanted to exit in this area, that made sense because you had this wick up here, this instant reaction off that swing low here first. So, I mean, the worst case scenario, you could have ridden this up. I mean, that's a pretty good trade right there. And so here we are now again, sideways, breaking out higher and see if we can go higher. We're getting pretty close to that swing high there. What are we, 17,309? We got to get up to 17,396. So less than $90 up, and we'll break out above that. That's what we'd like to see. So, yeah, there we go, kind of with what we're looking on that. Ethereum is looking better. Let's see here. Is this what I want? Man, look at that. Look how pretty that looks. So the 50 MA is the blue line on the daily here. The 200 MA is the red line here. Basically you've got these lower or these higher lows into this resistance here. We've broken out impulsively above the daily pivot, rallied up. This is what I'm talking about on Bitcoin. I want to see something like this. Now, again, I would really prefer to see this pull back toward the pivot here and then break out here. And you'll break out above the horizontal resistance, the descending channel resistance, and the 200 MA. But you dip on back here, you find support, grab some more support for you to rally and break out above that. If we can get that, that's a pretty good indication that this swing low is in here. And as you'll notice, Bitcoin had the lower low here, right? So you had that June low and then the, was this November low, right? In Bitcoin, but of course, Ethereum had the higher low off that. So, I mean, this is looking pretty good. Jonas, what's going on? Big Vape, good to see you guys. Lewis Wimthorpe III says tiny candle spreads. Rossmark, yeah, we're going to pop up the NASDAQ here in a minute. Sylvia, what's up, man? Nice gains with tier 3 lessons using trailing stop loss strategy. Fantastic. I love to hear that. We teach things that work, guys. That's the thing. We teach things at TWC that actually work. So, yeah. But anyway, yeah, so we could see, there's no saying that we can't see a thrust up out of here. But if we're getting an impulsive breakout above here, we want to see it remain above that resistance. Personally, again, I would prefer this pullback here to reset here on the daily. RSI, Stochastic RSI there. And then get this nice big thrust up out of here. And we should rally it on up through the R pivots there if we can do that. Again, same thing I was talking about on Bitcoin there, right? Change the horizontal yellow line to green and maybe it'll go. That's orange, man. That's not yellow. What's up with you? But yeah, so again, makes a lot of sense in what we're looking at here. Again, looks like 1, 2, 3, 4, 5 here up, right? And then A, B, C down. So, it looks like 5 up and 3 down. If this is 5 up and 3 down, then, breaking up higher there gets us, again, another 5 up. So we should be, rallying, breaking out above the swing high here. My targets generally are 1,700, 1922, and 2130 right now. Is coin a generational wealth buy at this point? I think there's a good chance it is, but it's still kind of iffy. Remember, the thing about coin, guys, is that's the Coinbase stock, guys, is that it's still a stock, right? At the end of the day, it's still a stock, but most of its value should be determined on how Bitcoin and cryptocurrencies are doing. Why? Because that's its revenue, right? That's where it makes its money, off trading, off custody, off stuff like that, right? And so if the market's green, if the market's good, then people are in there, people are doing that. Coinbase makes more revenue, right? Then it makes the company look good. If it's not, well, it doesn't. So, yeah, volatility's down here at the lows now. It's been, I think this is a multi-year low on volatility for Bitcoin. And that's what usually happens during bear markets, right? Especially as you get toward the bottom of bear markets. So we'll see on that. But there's a good possibility. Like I said, I got stopped out on the dip below the recent swing low. And so looking for maybe a bit of a pullback before I'm interested in kind of jumping on there. Deadly, what's up, man? Always good to see you. Swanee says bad monitor equals yellow. Fibbo says coin is laying off more people second time, so I'll buy when blood is in the streets? Question mark. I mean, you know, and it's always after the point, guys. You know, it's not inherently simple or easy. It's simple. It's just not easy to buy when everything seems like it's not going to ever stop going down, right? And everybody that you see everywhere is talking about how it's going to continue going down, right? But those are the points at which you make money. I mean, like stupid money, right? Or you're like everybody else and you wait for like the weekly time frame to do something different. In which case you get in well behind everybody else, right? And so as price rallies up, they're making exponentially more than you, right? So the goal then as a trader is to understand, okay, well, how do I get in intelligently? I need to stop thinking that I'm going to get in here for, you know, a 1,000,000% rally and just start local. Say, well, I'm getting in here for this trade. Let's see what happens. If it continues to play out like I'm looking at it, I can add to my position. I can build a position down here in what may potentially be this accumulative area, right? That's what you should be doing. Instead, most people are waiting to throw everything they have into it one shot, which is why you're scared to get in at the lows, right? It's you know, guys, I'm going to tell you honestly, it's not some system or, you know, some special system or you know, whatever else that's going to make you a better trader. It's just you getting beyond the psychological stuff that's holding you back, the mental stuff, the emotional stuff. That's the real killer, guys. That's the real killer. Again, that's why we're going to spend the next year, or, you know, whenever you join the LT program, that's why it's a year long. It's to spend a year going through that consistently, because it's nothing that happens overnight. You are not going to overnight instantly become something different than what you are, right? Your emotions aren't going to stop like this. I'm doing this 25 plus years, guys, and I can still get emotional. It's part of being a human being, right? So, yeah. Zog says that would be a great subject for a video, building a position. It actually is one I've got here written down in my my list of things that I've got going on that I need to check off as I'm doing them. So anyway, yeah. That's kind of what we got going there for that. NASDAQ. Let's do this. Let's not do the commodities. Let's just jump on the NASDAQ here. Let's see. I'd like to, if you guys aren't dating your charts, man, and you got to make as many charts as I do, you're just crazy. It's insane. Trying to find what you're looking for if it's not dated in there. All right. So let's jump here at the NASDAQ since we had somebody ask about it. Let's see here. Well, let's look at the futures since they have volume and everything. We just look here at the mini futures. That's fine. All right. So if I look at this, the first thing I notice is the potential. I mean, just eyeballing it. The first thing I notice is the potential here. Whoops. Come on. Of this and this, right? I mean, that's just the first thing I noticed. I noticed that basically what I'm saying here is we built some sort of support here, some sort of base, rallied up, rejected, came back, found support in that base, trying to head up again. Now, I'm not saying this is definitely some kind of, you know, head and shoulders or whatever. It's really kind of odd looking if it is. But we've got this retest of the base in an attempt to rally. So what we need to do is get above, impulsively above this daily pivot, which would also be that 50 MA, right? You know, that's the first goal. The second goal then, you know, on this larger time frame is a breakout above this 200 MA. So that means a breakout really above what we would expect, which is this most recent lower high here, right? So again, coming off the top here, you got a high, a low, a lower high, a lower low, lower high, lower low, lower high. Maybe, right? If we break out above here, this bearish market structure level on all these stock indexes basically is this mid-August swing high here. That's the one that the Dow has already broken out of, and nobody's kind of followed just yet. But man, oh man, That's the goal. If you can get above that, the odds that we're going to a new all-time high is much more significant. Because at that time, what you're looking at here is like a 1, 2, 3, 4, 5, right? So you're looking at this, and this is all of them. This is basically the way they look, right? They go 1, 2, 3, 4, 5, and then they go 1, 2, 3, 4, 5, right? And so what is that? That's potentially A, B, C, just a short C here, right? Had demand pick up, didn't let it really kind of play out further. So what do we need to kind of make this much more likely? Well, we need the breakout without going any further here, because we've got 5, right? We need the breakout above that wave B. That locks this in as 1, 2, 3 waves down. That's corrective. Okay? Now, that doesn't mean you can't have some sort of triangle. That doesn't mean you can't go, you know, A, B, C, A, B, you know, C, A, B, C, A, B, C, you know, something like this, right? And then, boom, out, right? I mean, this is possible. This would make this, and on all these indexes, basically, would make it a triangle, right? Potentially something like this, right? So then this becomes this A, B, C. And by the way, don't pay attention to the timing. I don't have any timing set on here. I was just drawing it out for you, okay? And so yeah, so I mean and if that's the case, this is a wave 4 then. So it's a 1, 2, 3, 4, and we have a 5, right? Well, heck, if that's the case, we start looking at a potential target, you know, much higher there, right? Some sort of blow off top still coming, and that would make sense, right? Remember, I've talked time and time again about the idea that I think we may still have that all-time high coming in because we didn't get the blow off top. And at the wave degree, right, being a super cycle wave, right, grand super cycle, we should have a blow off top. So we can potentially see, you know, 20,500, right? Because why? A triangle usually ends with a thrust, right? It usually ends with big move up, right? Now, the other way a triangle can end is it can take its time. And if it takes its time, if it doesn't like thrust up, if it just kind of takes its time heading up, usually in those situations, wave 5 is going to overextend. It's going to go a lot higher than what you would normally expect it to. Thrusts don't usually go, you know, more than they should. A lot of times they end up even a bit shorter. But that would lead to a blow off top, right? Does that make sense? So, that's the possibility. The other possibility, of course, with 3 waves down, is that you can get a flat correction, right? So you get A, you get B, you'll get C here, right? And what this means is you're going to get an ABC down, and then you're going to get an ABC up, but it has to retrace at least 90% of wave A, right? So it's got to get way up here around 16,000, right? And then you'd have 5 waves down, and it should terminate around where wave A is. Now, you can there's various forms of it. You can get expanded flat correction, where wave B pops out above where wave A started, and then wave C should target lower than wave A. Very rarely you can get a running flat. Running flat, you know, your wave B breaks out above wave A there, usually, you know, 10, 20%. And wave C then pulls back about 61.8 and gets it going there, right? So, I mean, that's the other possibility. Or, again, the simplest possibility is ABC down and head up, right? Now, if it's a triangle, this would have to be a wave 4, which means only 1 wave left up for 5, right? 5 waves up. If it's a flat or ABC and done here, then it could still be a wave 2 or a wave 4, either way. So this is where I get to the thing where I've talked to you guys about, in 2023, either we see a blow off top and that's it. So this rally up off these lows, Bitcoin, everything else is just going to be one move up, right? And that finishes wave 5, new all-time high. Or they're potentially like a 1-2, and it's just wave 3, or it's wave 1 of 5, right? In any case, it takes a few years, so maybe 2025 or 2026 or something like that, before it finishes the all-time high. So we have to see what's going on here with it. If the Fed continues what it's doing, right, and it continues slowing down, again, right now we've got like almost an 80% chance, according to the CME FedWatch tool, that we see another slowdown in the rate hikes, that we see, the Fed bring it down to 25 basis point rate hike. Remember, they slowed down from 75 to 50 in December. So the next one is February 1st. We could see a slowdown again to 25. If we're seeing that, then the odds are we run flat or start reversing around summer. End of Q2 into summer is where we would likely see zero hike, zero cut, or potential start seeing cuts, right? Yeah, I know that goes against what the Fed is saying, but so does everything else the Fed has ever done, right? They're always sure about what they're saying, and they rarely ever finish out as they say. That's just the way it is, guys. Okay? But they're dealing with the lagging data, and lagging data, is still showing that everything's decelerating. Job growth, CPI. By the way, CPI comes up this week, guys. CPI comes up on Thursday. So we've been in a big decline since the 9.6% CPI read there just prior to a year ago, just less than a year ago, a few months into 2022. And so we've dropped from that 9.6 down to 6.6 already. 3 points, guys, already in like half a year or something like that. So, if we hit 6.6, or especially if it continue to drop, I mean, it's what the media sits on about, right? And so, I mean, that should indicate that we're probably heading lower. And if it does, it's probably going to be a big push from drops in rents. Remember the difference between the CPI and the PCEPI. Remember, the PCEPI is what the Fed actually prefers as its inflation gauge. It's what it watches. The media and everybody else talks about CPI. But the Fed bases what it does on the PCEPI. Why? Because as I explained in my newsletter a few weeks back, the PCEPI, the CPI like doubles the rent, right? It doubles the rent's impact on its number. And we know that rents are dropping. And so if they are, I mean, that would be the big driver of CPI continuing to slow down, because we haven't really had that until just recently. Everything else looks about the same, right? We saw ISM come in just recently, just the other day. Huge miss. They were expecting a slowdown to negative 0.9. They actually got negative 1.8 on the slowdown. I mean, there was so much bad news, you would say, there in the ICM, which is how well your production, your economy and everything are doing with that, right? How are people buying? How are things being produced, right? Services, stuff like that. I mean, so when you're looking at all this, and you have all this continued deceleration, this continued pullback, I mean, it's hard to find a narrative for the Fed to continue raising rates, right? I mean, to continue with the 75 basis point or higher rate hikes, right? We expect them to slow down, and we should. And so again, if we see that coming, the market is forward looking, could be bottoming going on here as we pop up. And again, with Bitcoin as well, and Ethereum, and we're seeing lots of movement on lots of different cryptos that are setting up pretty good, right? CPI must be much lower now since it's calculated year over year. Well, yeah, that was the thing. In December, it was 6.6% year over year. Oh, I'm sorry, for the one we got in December, which was for November, right? Was it 6.6 or was it 7.2? 6.6, I think, right? Let me see here real quick. Let me find this real quick here. I'll tell you exactly what it is. I don't want to misspeak. Let's see here. We were... Yeah, not 6.6. We were 7.1. Okay. Yeah. Kind of pull this up over here for you guys. So yeah, so you know, again, we had this topped out over here in June at that 9.1. I say 9.6. 9.1 in June. And by November, it's down to 7.1. So yeah, big drop coming down in. You know, again, looks like it's peaked, right? So that's where we're going to kind of look for that that drop to continue on through that, right? Of course, you got everything else written in here with that CPI. So you know, this is of course, you know, year over year here numbers here as we're looking at their 12-month percentage change going on there. But yeah, so you know, again, expected for it to continue to continue dropping. I mean, look, it's down here at 5.5% or so, where it finally finds a little resistance before it continued up there, right? I mean, so why wouldn't we expect it to kind of continue down toward that area at least, right? And again, if it's doing that, then we would expect, you know, market being forward-looking, they would expect, you know, the Fed to continue lowering and potentially even reversing the rate hikes, you know, getting the rate cuts, which means, you know, looser monetary policy, you know, maybe QE starting in, I don't know, you know, kind of thing. Because remember, right now we're in quantitative tightening, right? By the way, guys, if you didn't know, let me see here. Let me see if I can find this chart for you guys here real quick. What am I looking for? Oh, M2 money supply. Have you guys looked at that? So a lot of people talking a lot of smack about the Fed, right? And oh, they're not really selling treasuries and MBSs like they said they would, and nowhere near like they said they would, right? Well, here's your M2 money supply, guys. Look at this. The money is actually dropping. The money out there, it's tightening, right? So I mean, you know, again, it kind of did it a little bit here, right? So they did the QE, boom, it went up in the QE, right? And then here was the pandemic, right? But we are pulling back. Their money dollars are being siphoned out of the system, going back to the Fed. Somebody asked, how did they do that? I think it was in Twitter or whatever. And as I explained, you know, they're selling their treasuries. They're selling their mortgage-backed securities. Instead, they were buying them here. So buying them here, they're buying them means they're giving money out, right? They've got to exchange dollars for those, right? Dollars go back out in the system. Here, they're selling them. So they're selling them, and you're paying for them because that's pristine collateral, right? That's pristine collateral. That's what you want to hold. And so they're doing, and so you're paying your money. They're taking your money back out of the market, back out of the economy, right? And so you see the drop off in the money supply. Let me see here. Going back to that chart, it looks like if the recession happens on the downfall, yeah, usually, you know, you're going to get that. You're going to get that recessionary thing. Now, you know, do we have a recession coming up? If so, is it going to be hard? Is it going to be soft? I mean, I guess the way I say this is when I'm trading, I don't really worry about it. I'm trading the charts, right? If I had to guess, I think we're going to get potentially some sort of recession. But I think there's a potential for it to be short-lived. But that wouldn't be permanent. Again, the idea is that we would have this final move up, right? Whether it's a triangle or a flat correction, or just, you know, this is the bottom here, it rallies up, right? We'd have that final push up, and that's going to eventually get us that blow off top. And after that, everything goes to hell in a handbasket, right? So I'm not too worried at the moment about recession locally. I'm more worried about what happens after one potential higher push, you know, up into a new all-time high. What happens after that, That's what I'm positioning for. Everybody else is really short term looking at local here, not understanding the larger picture, right? So for me, when I'm looking at long term, what am I doing? Well, my focus is on that what happens at that point. You know? But so right now we have to get through this local thing, right? So again, in terms of charts, that means we got to get above that wave B, that mid-August swing high on your indexes. That's what we're looking at, right? Andrew says to him, now that everyone and their mother is talking about recession, it feels now like a bottom more than ever. Yeah, you know, again, everybody's thinking that's what's going to happen there, right? Kramer, famous for some pretty bad calls here, you know, it seems like more lately than not. You know, he said now there's a chance you should be getting out of Chinese stocks and crypto. He basically said there's nothing good about them at all, blah, blah, blah. But interestingly, he was the one when coin came out that was like, oh yeah, we're good to 400 plus or whatever, you know, and it's done nothing but kind of drop since it came out, right? And I mean, if you were bullish on coin, I think you had to be bullish on crypto, right? Because again, as we talked about earlier, that's coin's business. Without crypto, coin has no business really, right? So when you think about that, I mean, hey, I don't know. It's kind of crazy stuff that he kind of comes out there, right? At the end of the day, does he say it? You know, guys, there's a lot of sensationalism that goes out there. You know, with the news, with the media, with your influencers, you know, your large influencers online and whatever. Most of them, it's just a lot of sensationalism. Oh my God, the sky's falling today. Oh my God, everything's rosy the next day, right? I mean, everything's oh my God. But you guys feed into it. You buy into that. That's why they do it. That's why they continue to do it, right? So yeah, I don't know. So yeah, you know, that's kind of where we're at with this. So what I want to see is, first of all, a breakout above the swing high here, and then I think we see a breakout above wave B. You know, again, that confirms the Dow's breakout above its mid-September swing high or mid-August swing high. And as charts start doing that, that significantly increases the likelihood that we break out to a new all-time high, right? Speaking of the FedWatch tool here, look at this, guys. Traders, the market, is factoring in an 81.1% chance that we get a 25 basis point rate hike, just under 19% chance that it's 50 point, right? Now, again, you know, this doesn't happen for another 3 weeks, right? So anything can happen in that time, but this is after last week's jobs number, right? Remember, jobs came out last week at 223 after, you know, consensus was for 200,000. But again, that was less. That was a continuing a downtrend that had been going on for most of last year off that 796,000 print earlier in, you know, Q2 or whatever. It just been coming down consistently, right? And it was less than the month before, which was originally 265, and it was revised down to like 255 or 253. And so, you know, even though it was larger than consensus last month, it was still, you know, much lower than the previous month's revised, right? So again, it's all about deceleration. Everybody talks about pivots. It's all about the deceleration. If you can't figure out and pay attention to deceleration because you're so stuck on the pivot in your narrative, you're missing the chance to make, you know, to make money along the way, right? Again, it's like being in a chart and only trading the trend on the weekly. Well, I mean, okay, so that's kind of safe and all, but you're going to miss a whole lot of profit along the way because it's going to take a while for the weekly to change. And you could have snagged it down on the daily. Could have got even better trades on the 4 hour, right? A lot more trades, a lot more money. Rinse and repeat, right? Get in a trade, make some profit, lock it out in profit, rinse and repeat. That's what you should be doing. Let me see here. So yeah, that's kind of where we're at there with that. Let's see here. If we look at, let me see. Let's pull up. I don't know if you guys have seen my silver chart. I've got this this interesting thing here, right? What if this is what silver's doing? Now, you guys know I've been talking about the idea that we get silver potentially down below 10, right? But I keep telling you, I'm still open to the idea we could pop out higher. And if we do, I think, I'm kind of looking at this idea here, which is that we've got this multi-decade cup and handle pattern, right? So this starts back here in January of 80, right? You guys know what happened over here, right? This was the Hunt brothers. What happened on that, right? Silver Thursday, think about all that. 80, 81, coming into this, right? So that starts this downtrend into a low here in 91, a decade of a downtrend, right? And then, by the time we get to 2000, we're just slightly higher, right? But then it rallies up, and we do good into, we get into the great financial crisis right here, 2008, we drop down, but then we've rallied up into 2011, right? Which was when QE really started kind of pushing out there, right? And so we get the drop here into the mid 2010s, I guess. 2015, 2016, 2015, 16. And then we rally back up here. So, I mean, it looks like we may have this very large cup and handle pattern. For our part, again, we had the high here at 29,863 in 20. And when we had just a slightly higher high here at $30.94, $30 and 9.5 cents here in 2021. And then we get this pullback, right? For most of 2021. 2022 drops down lower. Finds support around the EQ of this descending channel, right? The handle. Prints this large lower-legged doji that closes pretty close to the top. And this year, we have opened and currently remain above the weekly pivot. So if we can get an impulsive breakout around this, around this 27 area, 27 handle. I mean, initially I'm looking for this rally on up in here, 40, 43 at least. But I mean, I'd be looking into something like that, boom, and then some breakout here. If we get that, I mean, cup and handle here. Potential target up there at around $660. I mean, what kind of stuff would have to go on to get silver up there, right? So I don't know. A lot of times on the very large time frames, patterns don't really play out as you would expect. But man, this is pretty clean. For the most part, I'm not a big fan of this little push up here at the low, but for the most part, it follows pretty good along the track there. So I'm interested, longer term time frame, kind of seeing how this works here. We'll see. How long do I think it would take it to reach that top, since the formation took like 50 years? Yeah, I mean, so I think it would be quicker. I mean, you can look here where silver from 71 to 80, so you got a 10-year move here. Where silver, we'll say from where it closed in that year, right? And you've got that 3,300% rally, in 10 years there. So I think we'd probably see something like that. I think it'd be a lot sooner, maybe 10 years, maybe less. But yeah, I mean, I think that would potentially be the way that may play out. I don't think it would take, the same 30, 40, 50 years, anything like that. I don't think. So we'll see what happens here. Got a lot of potential setup on that. Oil. So oil, I'm kind of looking at this idea that we've still got this rally up to complete maybe a wave two. Up around the 100 handle up there. Right now, we need to see a breakout above this swing high up here at 76.74. So impulsive breakout above the hourly pivot should carry us above that. We could get rejected at the daily pivot, so we get this rally up toward the daily pivot and then pull back down here and then break out higher. But if we can get the move up toward the R1 pivot, I think the hourly pivot kind of holds there. But I don't know. I mean, this is taking some time. I could see just this moving up toward the daily pivot, pull back down toward, 75 or so. and then that rally higher. We're looking for a breakout. I mean, ultimately, we're looking for an impulsive breakout above the daily pivot. If we can get that, it should carry above the swing high, which gives us that wave 3 target, $93 area for that. Esteban, what's up, man? So yeah, you know, things still kind of working is what we're expecting, and we're seeing it here. Nat gas is a little bit trickier at the moment. Let's see. Yeah, I kind of checked out even more during this morning. So I was looking for a potential reversal like we're getting it here, maybe. This is the daily. Let's zoom in a bit here. Yeah, so, you know, the idea that maybe we have like a some sort of diagonal here. So ABC is 1, 2, ABC is 3, 4, ABC is 5, right? And then you got maybe like an ABC here. And so we actually dipped into this 2-hour demand structure down here. That's actually pretty good. That's a nice candle. I like that candle there. Look at the volume. Again, compare the volume and the price action here. So this is the current candle. So 2 candles ago here, you know, you have the candle open there at 3.789 and then closed at 3.657, right? So you're looking at 13.2 cents, right? This one, though, opened at 3.655, closed at 3.638. So not even 2 cents difference here, but much greater volume, so much greater effort, much less result. Little pullback, little dip into demand here, and I think we should see this rally up. So we'll look for a breakout above 38.29, $3.82.9 cents. And from that, my initial target would probably be up here around 4.592. Again, coming up here toward this target I've got up here at about 4.88 area. So, you know, initial targets, that's what I'd be looking for. As long as this support holds here. If we break down through the support, well, maybe we're looking down here about 3.143 to begin with. You know, initial target there. Nat gas looks like it wants to move up. So does your gas bill at home. Yeah, right. But man, you know, this is a big move down from the $10 area we were up here, right? Way up here, around $10 up here in August, right? So going on 3.5 months of downtrend here. You know, nat gas here dropping off about 65% from that high up there, right? Remember, this is the time when this was the time over here where everybody said it was going up, it was going to keep going up. Oh my God, Europeans are so screwed, right? And then of course, you know, everybody was very, very vocal. Everybody was very downtrodden about it, right? So they were buying up natural gas. Remember, guys, when it comes to commodities, people tend to buy up those fifth waves, right? I mean, not necessarily like natural gas here, but when you think of in terms of commodities in general, generally we tend to see fifth waves over hitting targets higher than what we would expect, rather than wave 3, because you know everybody buys commodities on fears of war, famine, stuff like that, right? So it's this idea they want to protect themselves. They buy it, which is opposite what happens in the markets, right? In like stocks, generally people tend to buy third waves, right? They're like, oh my God, I'm going the wrong way. It's not a dead cat bounce. I need to cover my short and get in, right? And they make that, except when you get to these like this super cycle and higher type time frames, in which case then, because you've got fifth wave kind of thing going on, you're usually looking for a blow off top. Everybody's just overly exuberant, right? So that's what we're kind of looking at with all that. Anyway, DXY. We didn't look at the DXY, did we? Well, why don't we take a look then? See if I can find the one here. DXY. What we got here? I mean, man, that's what we're looking at right there. So, you know, big thing is here that we've got this, you notice the weekly pivot is right there around the daily pivot, right? Big thing is look at this candle and rejection here. On that weekly. Rejected, sent back down, and now we're engulfing bullish or bearishly. Weekly RSI still has room to fall further. I mean, ultimately, you know, as long as this weekly pivot holds as resistance, I think, you know, we come on down here to the S1 pivot, which is right around that 93, 94 handle, right? So, I'm not feeling overly bullish at all about it. If you had to count, maybe 1, 2, that's an ABC. Might be a 1, 2, 3, 4, 5. It's gonna be like 1, 2, and then 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4. 1, 2. So you get like a ABC is a 1, 2, ABC is 3, 4, ABC is 5, right? So that gives you an ending diagonal. So then you're 1, 2, 3, 4, 5 still to go at least, right? So again, the idea being that you know, we get this drop down and rally back up into all this resistance here and get rejected. You know, come on down, rally back up, get rejected, continue lower. That's my operating plan at the moment. That's what I think is likely to happen at the moment. Locally here, we could see continued push down into the S1 pivot, and then a bounce back up into this, you know, 104 area below the daily pivot, and then continue lower on that for sure. You can get like a, you know, like wave 1 here, right? Wave 1, 2, 3, 4, 5 kind of coming down. But I mean, that's what we're at. You know, this is kind of where we're sitting here on this. It doesn't look overly exciting. Big targeted downside, you know, locally $100 or so, 100 points there. You know, at that point, you know, it's a psychological round and tens number. If we lose that, especially an impulsive drop below that, I think the weekly S1 is all but guaranteed. Until then, something else could maybe still happen, but yeah. Let's see here. And so let me go here to Gala USD. Gala USD. Let me go ahead and make a copy off of start off this Ethereum chart. Man, I love this Ethereum chart, guys. Do you not like this Ethereum? I mean, look at this. Let's see if we can do some stuff here real quick. I mean, man. So you're kind of getting support right here where you had support, right? Is where you found support. And then you've got this resistance right here at previous base building right here, right? And you're kind of consolidating up into that. I mean, you're looking for a big pop out. I mean, it looks good. I like that Ethereum chart for sure. Let's see here. Man, if you haven't joined us, you guys really should at that link I gave at the beginning of the stream here. Tier 3, man, $19.99. No auto renew on that, by the way, guys. You don't have to worry about remembering to cancel or anything like that. It's 1 month, $19.99. If you're serious about getting better at trading, like really serious, like you're willing to go in there and actually do the work, man, it's a steal, absolute freaking steal. Let me see here. Usually we charge $200 month to month for that. Whew. Why are you always going to ask after it does the big rally? You should be asking down here. I mean, like this right here. I mean, geez, oh whiz. If you weren't long right there on the breakout there, you know, you should have been long on that. This is one of the few ones. If I saw this setup right here, with this resistance here coming in so cleanly, right there, right? And you know, and I mean, you can potentially even wedge it here. Whoops. Like this, right? I mean, if you need to, I wouldn't have done. I mean, I don't need to do that, but this resistance with this right here. I mean, this is one of those ones I usually, you know, wait for a pullback. This is the one of the ones I just buy on a breakout. I would have just bought on a breakout on this. I mean, that's huge rally up there. Above the 50, above the 200 MA. Let me see here. You guys, I love you guys. Talking about tier 3 being the way to go. Best thing out there. I love that, man. You guys are awesome. So our weekly, I mean, weekly Stoke RSI is getting up there, but it's not overbought yet. Look at the volume here. Actually, this week, at least this week just started yesterday, guys, and the volume is greater than the whole previous week there. But it's because you've got to get through this. You see how this sideways here? I mean, especially if you're looking right here, there is a whole bunch of supply in that right there. So it's going to take more. You're going to have a lot more supply coming in on you trying to protect their positions because they didn't take profits down here, right? Remember, guys, it's all about consistently locking in profits. Yeah, weekly pivot is way up here. As with all these other charts, guys, if you can get an impulsive breakout above the weekly pivot, there's no reason you shouldn't be looking for a likely rally through the R5. New all-time high, whatever. Depending on your chart, of course. I'm going to tell you guys right now, to me, that's the demarcation kind of area right now. The other way I would look at this, you guys know me, I'm all about channels. It's a great looking channel right here. I can't get it to get in there. There we go. And look how well that EQ works as support, resistance, support, resistance, support. Coming off here, I mean, geez, oh whiz. If we can take out this 7.2, 7.3 cent area right here, I see little reason not to think it won't rally to the pivot. And again, most likely you rally to pivot, you pull back, and then you break out. Let me kind of zoom in a little bit here. What we got going on? I like that. I like that channel a lot. That's a nice channel. Let's see here, 12 hour. I mean, my initial thought looking at this is, again, rallied up impulsively through the pivot, hit the R1 pivot area. I always look for a pullback toward the pivot and then a rally higher. It doesn't always happen, but most times that's what will happen. Let's see here. Oops, 4 hour, there we go. We've got consolidation locally here. I don't know. You know, see, again, there we go. 4 hour Stoke RSI resetting down into oversold here. Everybody got interested up in this area. See all that volume picking up? Why is that? Because look at where that is. Look where that volume picks up. Right here, right? Right as we hit this area right here. Support resistance area right here. So all that selling started coming in, buying just ate it up. I mean, when I glance at this, I'm thinking A, B, C, A, B, C, A, B, C. So I'm thinking A, B, C, D, E as a triangle maybe. So we might see one more push up to finish out like a fifth wave of some sort. Right? Let's see here. Looking up there around 05824, 05824 maybe. Yeah, I mean, without looking at anything else, I mean, I look at that, and that's what it looks like to me right here. Now, is it? I don't know. That's just a quick look. Nah, no, it's 5 down. See, it looks like 1, 2. Unless this is 1, 2, 3, 4, 5. You see? 1, 2, 1, 2, 3, 4. Yeah, see, now again, I zoom in here, and this looks like A, B, 1, 2, 3, 4, 5. C, right? A, B, 1, 2, 3, 4, 5. C. A, B, you know, 4, 5, C, right? A, maybe a W, X, Y or something here. So maybe, yeah. So maybe A, B, C, D, E, pulling back toward this 0, 41, 50 kind of area, 60 kind of area. And then we look for that breakout higher toward that 0, 5, 8, 2, 4 kind of target. If we got that, what is that? I mean, that's a pretty good 39%, right? So if you take that trade, guys, if this is what you're looking at, this is the way I would take that trade. Right? And looking for this pullback, we'll say here, right? So it's wherever the pullback is, it just makes sense that it would be maybe here toward this resistance support area here, right? Stop loss there's no reason your stop loss should not go anywhere any further than what would be wave C here. Because if this count is correct, the trade for this is based on the idea this is a triangle. So if this is a triangle, then this is wave C. So wave E cannot drop below wave C. So there's no reason putting this even lower below wave A or anywhere else. You're right here below 0.04. So I mean that should be your stop there. Your entry is wherever, you know, wave E ends. So we'll say maybe it's right here where I've got it. And then of course your target becomes, okay, potentially this 0.5815 area, right? So that gives you almost an 8.5, 1 to 8.5, right? So you're risking $1 to make $8.50. I don't know. You know, I'm not interested in going straight up to targets all the way. I would probably take profit right around the R2 pivot. You know, because it's better taking it there than to have it just miss this target. Then you sit there and keep holding on, hoping it goes there, right? So yeah, I mean, that's what I would be looking at right now without looking at anything else. Yeah, I mean, this looks like, you know, 1, 2, 1, 2. See, 1, 2, 1, 2, 3, 4, 5 maybe. Or 1, 2, 3, 4. I mean, but that gets kind of, it's kind of big on that. But anyway, yeah, locally, that's the trade I'm looking for right there. If it drops below wave C here, there's no reason to enter along there. It just means this triangle doesn't exist like we think it does, right? But that would be the shorter term trade on that, I think. It's a pretty good risk-reward return. But I would be looking for that pullback to do wave E before getting into it, right? And on the 1 hour, that very well may get you to the, depending on how long that takes, how many hours that takes, that might get that 50 MA right up to you on the 1 hour as support, right? Fibbo says Bitcoin on the way to 17.5. Like I said, keep talking. Oh man, so yeah, good stuff here. I mean, and if you look at the hourly, look, we're just now breaking out oversold. Got a lot of room to go. But yeah, I could see that pulling back potentially. It doesn't. D does not have to end here. D could, you know, rally up here toward the R1 pivot and then pull back. But potentially A, B, C finishing out on that. So yeah, we might see it rally up to that 1 hour R1 pivot and then pull back here and then get that breakout. 4 hour, yeah, see, that'll pull us up a bit and then we can pull back a bit. 4 hour will reset down into oversold quite potentially. And get that rally up off there. Yeah. I mean, that'd be a quick target there. That's what I'd be looking at. Y'all want me to check over Bitcoin, huh? Yeah, there it goes. It wants to get up there. Did it break out? This is the Coinbase chart. 17,396.25. Get over there. 17,404. That's nice. Yep. So again, guys, basically, I want to see I would love, ideally, to see a rally up into this R1 pivot. That EQ up there around 18,092. And then see a pullback toward this daily pivot here, hourly pivot area, and then break out higher. because that would just give us either run into the daily pivot or a peak just above it, pull back here, and then we get the big break. And then again, on the daily, that means, you know, we want to see this rallying up here. Oh, this is at the daily pivot here. Yeah, the daily R1, right? Yeah, so I mean, you go from the daily pivot to the R1 pivot. Man, this is what we want to see, guys. If you're trading pivots, this is exactly what we want to see. I want to see this rally up through the pivot into the R1, pull back to the pivot, break up and rally to the R4, R5 area, or even break out higher if it's, you know, if it's going to rally up strongly all of a sudden. So yeah, we all love Bitcoin here. I hope so. What are we doing, right? So anyway, yeah, guys, that's what I'm thinking. You can see that right here. We're just hitting this resistance area here. So again, the next target becomes this area right above that R1 pivot. It doesn't have to stop there. And here's my thought there. If it rallies impulsively up to the R2 pivot or R3 pivot, we're just going to get a pullback locally, and it should rally above the R5. If we rally impulsively above the R1 up into the R2 or near the R3, we should just get a local pullback, and then we should just see it continue all the way up there. See some overextensions happening. And that's definitely possible. I would prefer, again, though, to see just the move up to here, pull back, gain some strength, and then rally up through all that inefficiency up there to higher. All right, guys. I appreciate you all stepping in as always. Be sure to, you know, follow me, TX West Capital there on Twitter, right here on YouTube. Hit the, you know, at YouTube/Texas West Capital. Hit the like button. Hit the subscribe button. Same thing on Twitch. I'd appreciate you guys. Twitch.tv/Texas West Capital. And then, of course, on Twitter at TX West Capital, guys. We're also on Instagram at Texas West Capital there as well, if you're interested in following there. I'm trying to do some new stuff there. Follow me. The marketbreakdown.substack.com will get you on the weekly. It looks like we might go up to bi-weekly on that newsletter. By the way, check out my threads, guys, on Twitter, as well as those are what I'm adding to Instagram if you're only there. Even on Facebook, guys, facebook.com/Texas West Capital. But if I continue to get enough interest in these threads, because they take time, but if I get enough likes and retweets on those, I'm actually going to probably put out a weekly newsletter where I pick a thread and go into it much more in depth. And these threads are all about trading psychology, tips, tricks, and techniques, success mindsets, you know, all these things that we need to be successful, not just in trading, but in life, where I kind of touch on them in the threads, and I'd love to be able to expand on them more. But, man, got to have the interest because they just take a lot of time. So make sure you guys are liking and retweeting those, and, you know, join me there at the marketbreakdown.substack.com. That's my weekly macro and charts look at what's going on. And then we'll see if maybe we start that other newsletter as well. All right? Really appreciate you guys checking in as always. Remember, the only thing you control in the market is how much you lose. It's absolutely it. So keep working on risk management is the most important thing you're going to do day in and day out as a trader. If you're in Discord, I'll see you guys here in a bit. Otherwise, man, why aren't you guys in Discord? Tier 3, $19.99, 1 month, no auto renew. Guys, you'd be silly not to jump on if you got $20 sitting around. I gave that link at the beginning of the video. It is a special link. It's not the normal Tier 3 link, so you'll have to go through that link to get that price and do that. But we'd love to see you in there. Y'all take care. I'll catch you on Friday, 11 a.m. Central Standard Time.